Welcome back, everyone. My name is Michael LeBlanc, Senior Advisor and Senior Portfolio Manager at Canaccord Genuity Wealth Management and partner at LLC Private Wealth. Thanks for joining us again this week for the tactical update, where we're going to cover off the month of May and just give you a summary of what's been going on, what we see coming up, and also we're going to talk a bit about this big tech rally and how it's impacted the markets for the month of really the second quarter, and give you a little bit of insight on what we see there. As always, keep in mind, everything we talk about here is for information purposes only. Always do your own due diligence or reach out to a professional advisor. Always happy to chat, answer any questions you have about your own portfolio strategy and how we can help you going forward. So with that, let's jump into what's going on in the economy. We're looking for the employment numbers coming out for May. Also looking at the jobless claim numbers later in the end of the week. We're going to see the manufacturing numbers and the weekly petroleum status update. So really taking a look into those inflationary numbers around the employment issues. As we've talked about in previous videos, the big issue we're facing now with inflation is the employment numbers. We've inflation, interest rates have gone up. Obviously, we've seen a lot of price correction to the downside and pushing down the overall inflationary numbers. But we still have that really low unemployment rate, which is tough for the economy to really slow down, or for the central banks to ease the interest rate hikes, and fear that we'll see inflation rise up again. We're kind of caught in between this. You know, everyone wants a soft landing on the recession, but it's not really the best scenario, or certainly not the most painless scenario, in the sense that if we have this soft landing, unemployment numbers stay low, interest rates stay high, and we kind of just chug along there for a while without being able to cut rates. Housing market doesn't fall down as employment numbers support continued buying. Whereas if we saw a harder landing, where we had a drop, a more drastic drop in the employment numbers and the unemployment rate going up, housing markets would correct. It would be quick, or certainly faster, and possibly a V-shaped recovery, which I think what a lot of people are hoping for. But as we stand right now, we haven't really seen those jobless numbers start to fall off. And we have seen a little bit of the payrolls fall off, so people are making less, but job creation is still pretty high out there. Stocks were pretty muted this week, Thursday and Friday, much better after the debt ceiling deal went through in the United States. So that's supporting the overall markets out there. Also some better numbers out of China. A little bit hopeful that the U.S. interest rates won't rise this month. And in fact, the languages right now where we might not see, there is priced in a quarter percent in the next quarter, but we might not see one in the next couple of weeks anyway, as we see the language coming out of the U.S. Fed easing off a little bit. As I mentioned, the House and Senate down in the United States have voted for that crucial debt ceiling bill, making clearing the way to prevent a default in the United States. On the currency front, we did see the U.S. dollar stall a little bit. Again, not a big surprise. We always kind of see this. That flight to safety. So when there was a lot of concern out there around the debt ceiling, around the markets, people piling into the U.S. dollar, as that eased off a little bit at the end of the week here, a little bit of pressure off the U.S. dollar, and we're starting to see that cool down. We might even see that continue to slide as we go into later June with the interest rate outlook. If we don't see that hike, they might ease the dollar a little bit further, depending on what the language is going into July for the interest rate hikes moving forward. On the commodity front, oil edged a little bit higher as the Chinese data pointed to expanding factory activity. This is just ahead of the OPEC Plus meeting coming up on the weekend. Most of the analysts are taking the view that the cartel will hold off adjusting its production levels for now. Given a little bit of given a little strength to the price, as opposed to increase in supply out there, pushing the price down a little bit. We also saw base metals edge a little bit higher while gold faltered a little bit. There's actually a little bit of expectation that gold might show a little bit of weakness here in the next quarter. So keep an eye on that, and that's just on the debt ceiling and potentially a little bit more strength coming into the markets, and dependent on those Fed rate hikes that we're seeing coming, or the language coming out of the U.S. Fed over the next month or so. Something that we've seen a lot of talk about is ESG, or ethical, social, and governance investing. We've always said we've had a couple of videos specifically on this topic. One of the big concerns around ESG focused in people's portfolio is it is definitely a title type of investment. When things are good, people and the economy really will flow money into ESG, into green technologies, really push things forward. And we saw that in 2021 coming out of 2020. A lot of interest into the green tech. When we got into the tougher markets of 2022, though, people started to back off. All of a sudden, the idea of green technology and spending more for the green technology wasn't as important as it was to protect returns or to find the cheaper, safer bet when it comes to growth in the market. And we're actually seeing now investors, an investor-driven climate change push that some of the world's largest oil companies has stalled out. Exxon and Chevron Shellfield both struck down a raft of proposals urging the companies to cut greenhouse gases and greenhouse emissions derived from burning fossil fuels. So these are the shareholders and the investors basically saying, we would rather just see growth and continue to see stronger numbers than focus on the ESG side of things. So not overly surprising that we've seen a bit of slowdown in kind of the green investment or the green technology. Doesn't mean it's dead, doesn't mean it's not something to keep looking at in the portfolios, but it's always going to be a challenge during tougher markets for ESG to really lead the performance path. You have to look, if we look for more liquid times, when money's more free flowing and there's more growth out in the markets, that's when we really see those areas push. So with that, what's coming up ahead? Well, we are looking at Carnival Cruise, and they're expected to post a rise in their second quarter revenues, hopefully in a rebound of people getting back on the cruise ships and doing more travel. We certainly have seen that on the airline side of things, but we're looking into those numbers to see, how much that is really playing into the recreational travel area. Cisco, Nike are quitting Russia as a pace of Western firms leaving speeds up. Of course, we saw a lot of this over the last couple of years with the war going on there. But Cisco and Nike plan to fully exit Russia. The two firms told news outlets as more and more Western firms are departing, just distance themselves from the political nightmare that's over there. And we'll definitely see that trend continue. U.S. is weighing in on lifting summer smog rules to try to lower the gasoline prices down there. So obviously, the election's heating up in the United States, and both parties are looking for ways to win favor with people. And one of the big things that overhangs the U.S. economy, especially in inflationary time, is price of gas. So they're looking at lifting the EPA rules as far as smog goes, and allowing for the gasoline prices to drop a little bit in the United States. Oh, sorry about that. We're also seeing Accenture tempers their 2022 profits. So Accenture in the portfolios. Basically, it's a stronger dollar. It's affecting their overseas sales. Obviously, translating back to the U.S. dollar affects their overall earnings. So they're tempering back a little bit of the 22 forecast and the 2022 fiscal forecast based on that. The U.S. is also banning sales of Juul e-cigarettes as the company is trying to seek a stand against that. But sales of Juul e-cigarettes have been blocked in the U.S. by the Food and Drug Administration, which is a major blow. Juul being one of the leaders of the vaping craze, especially among teenagers down in the United States. So that's going to have a huge impact on that company. We're also seeing Rogers and Shaw's M&A. It's currently hinging on the Shaw Mobile sale. So far, it looks like everything's going to move through. We're seeing here in Vancouver traffic being installed as they take down the Shaw communication signs off the buildings to replace them with Rogers. So things look like it's going to move through with the $20 billion acquisition after the sale of Shaw Mobile. Canadian May factory sales most likely will be down according to StatsCan's estimates. Seeing about a 2.5% drop from May to April, largely by lower sales in motor vehicles and primary metal industries. And this is just the hangover of the higher cost out there. People cutting back more, especially when it comes to bigger tickets and financed items. Obviously, the higher interest rates are impacting things. It was only a year and a half ago you could buy a car at almost 0%, and today I see the ads out there for 7% plus to finance a vehicle. So that makes a big impact on people's buying power. The affordability for Canadian home building base must be doubled by 2030. So this is looking at the lack of inventory in the Canadian housing space. Canada's homes. Number of new homes being built have dramatically dropped, and it's really around the cost of building right now. I've talked to a lot of developers. Land prices are coming down for developments, but it's really the cost of labor and the cost of materials have really put the pinch on them to be able to make the deal happen or be able to make some money while building. So there's going to be a lot of pressure on the Canadian government to increase the number of new builds over the next 4 or 5 years to meet not just current demand but future demand. U.S. labor markets still remain tight. We talked about it's a big problem around the inflation numbers. We're seeing the number of Americans filing new claims for unemployment edge down last week, as we see unemployment numbers staying really low, both in the U.S. and Canada, and that's the big challenge we're facing right now. So let's talk about what's happening in the tech market. We've seen a big turnaround so far, especially in the second quarter here. But for this year, can this continue? And if you're looking at your portfolio and saying, hey, I'm seeing some great growth numbers, especially if you're looking at the U.S. numbers, a couple of things to keep in mind. The first is that the top 5 contributors to S&P's performance this year so far have been tech companies. So the big ones: Meta, NVIDIA, Amazon, Apple, and Microsoft. In fact, they account for about 118% of this year-to-date performance from the S&P 500. And they were the biggest laggers last year. We saw tech really get hit hard in 2022. So a bit of a turnaround. We do have Microsoft and Apple in the portfolios. They're doing quite well. A lot of this is driven around AI. A lot of the hype and money flowing into the AI area. In fact, in June, we're going to do a focus video on AI just to talk about what's happening there, what the investments look like, and really what's the real potential we're seeing out of that. Something to keep in mind, though, as I mentioned, we're seeing that being driven by tech. But if your portfolio is not really tech heavy, it is a more volatile sector. 8 of the 11 different sectors in the S&P in the U.S. are down year to date. So you might not be seeing as high performance in your portfolios because of that lack of weighting in tech. Tough to overweight that much tech, especially if you're lighter on the risk side of things. You don't want to be overweight, because when it turns dramatically, like we saw last year, we saw those names down 30 to 50%, depending on the names that you're in. Also, in the portfolios or in your portfolio, we always try to recommend, look for different avenues, more value-oriented avenues into a theme like AI. We talked briefly last week's video. NVIDIA, obviously the chip manufacturer NVIDIA, which a lot of their growth has been driven by, AI equipment, the equipment needed to run AI using their technology. Taiwan Semiconductors, of course, build those chips for NVIDIA. A little bit better value than NVIDIA, hasn't seen as much growth, but should continue to do quite well. And then, of course, in the portfolio as well, we do have Celestica, which has been doing amazing in the portfolio, as it takes advantage of the board building for that technology as well. Microsoft, one of the biggest investor into ChatGPT, the kind of the leading AI in there. Meta implements in different AI technology, same as Amazon and Apple, also big players in there. I'd also say they weren't the top 5 as far as performers this year so far, but Alphabet, Google's parent companies, also jumping into that ring later than the others, but obviously going forward, trying to take advantage of that theme. So that's what's been driving those tech markets. Going to continue. The big question that we had there, obviously that theme is still playing out. A lot of people are trying to figure out how it is actually going to be used, because there's been a lot of starts and a lot of fails on that front. So keep that in mind when you're looking at investing. Whenever you look at thematic investing, whenever you're looking at that that core theme behind things, whether it's cryptocurrency, AI investing. We saw cannabis markets several years ago being driven by that hype out of the gate. Be cautious. That's why we look at those different companies that are benefiting from that growth, but not directly tied to that growth. Because as quickly as it can rise, it quickly pull back. We've seen that in cryptocurrency as well. Really tough 2022 after a massive run in 2021. So be cautious on that. Always look for value. And as we've always said, if you look at my crypto videos, if you look at the cannabis videos, any thematic investing, know what you're buying and why you're buying it, right? So if you're buying Microsoft because you want exposure to AI, you want to know exactly how that exposure is playing out and why you're buying it. What's that going to bring to them as far as revenue flow or revenue growth, and at what cost? So just fully understand what you're buying and why you're buying it. If you're going on the theme of AI in this case, or any market, just make sure you fully understand that. That's a big part of that. So with that, that's all I got for you for wrapping up May. As always, reach out to us. Go to mikeonmoney.com. Always happy to answer any of your questions. Love to hear feedback. Any ideas you have for topics. This is a June's topic. We're going to be talking about AI. I put an article into our monthly email, which you should be receiving with this video, or if you're watching this on the replay, go to our website. You'll be able to find it there, mikeonmoney.com or llcprivatewealth.ca. It's a great article on kind of AI in general and all the different companies that are looking at it and how they're implementing it. And I look forward to, we're going to do a live video, as mentioned, in June on AI, not only how companies are using it, but how people are using it and how that might impact your investing life and maybe your personal life. But with that, thanks. Have a great weekend and a great start to June. Talk to you soon. Thank you. Bye.